Market conditions bullish in a bull market. Currently, this rank is at 23, so continuing to climb here. This showing this 23 number is this upper momentum range. So you can see how extreme we're at currently, and historically we are as high as things have been in these overall trends, at least in the last 20 years or so. Shorter term, we are seeing some momentum strength, but some breadth weakness, not a big change yesterday. We'll take a look at the charts, and breadth also stuck right there in the middle. We've talked about this before. I'll continue to point this out. This could be a bearish point of this rally taking place, and that is the breadth is continually declining. So we just don't have large participation currently in this rally. We really haven't all year long. It's been relatively weak. We are seeing buy-sell ratio really weak right here, 0.38, and continuing to widen, which is interesting. One of two things can happen here. The rest of the stocks can catch up to all of the others. In fact, let's take a look at the indices, because this index scan, you can see the buy-sell ratio on both the Dow Industrials and the NASDAQ 100 are at 1.5, and everything else is pretty low. So we're seeing concentration into really high quality large cap names, Dow stocks, NASDAQ stocks, S&P stocks. You can see there's just more in that group that are down in that sell range. So we're still stuck at 0.6. So really, we'll see if the weakness of some of these others catch up, or if the strength of some of these start to decline. And we'll know with continued buy-sell ratio. But we are also sitting right at a support area on S&P 500. If we look at that chart pattern, sitting at this support area, and we had this breakout point. A couple days of a solid, kind of a quiet, non-decision type day, and then a little confirmation bar here, not on big volume, relatively light, but still buying into that dip, that overall uptrend mentality, at least on the S&P 500 and NASDAQ. If we take a look at sectors, we are seeing not a big shift yesterday in sectors. We're seeing consumer services, healthcare, technology leading, with the majority stuck in a trendless or that hold range, and a few that are trying to start here. You can see real estate with that uptrend is maybe got a new start to a potential support range. It's really gotten hammered, been relatively quiet. In fact, it's interesting. This real estate ETF IYR looks a lot like a bond chart, and that's really correlated to bonds and interest rates. We'll see if we get some strength in bonds. In fact, let's jump over and cover that real quickly here. We're seeing TLT have some retracement in the last few days. It had this run up here. Now it's just consolidating, potentially building a support base on bonds, and that's what we want to see for lower interest rates. We saw commodities yesterday. Oil had a significant move higher, up 3%, and gold and silver stuck right here in that range, towards the bottom end of that range, the bottom end of that momentum zone range, and find some potential support here. Gold has a little deeper retracement with that new sell trend and below the 236 zone. So it's got some resistance right here. Some of these precious metals may have a little bit of a pause right here. Oil, we'll see if that rally continues into the day. Some muscle stocks to consider for today. ALAR, which has been a nice trending stock, really smooth trending stock, pulling back inside of that momentum zone, and possible confirmation bar for more upside on ALAR. And then a nice looking pattern is AMRX, which is a medical drug pharmaceutical stock. Really, really tight consolidation base, sitting right at this momentum zone and also at prior support. And it's just continuing to squeeze tighter here. A nice confirmation bar on increasing volume. See if we get a breakout potentially on AMRX. That'll do it for today's update. Everyone have a fantastic day today.